With a reported 2.8 million SMEs in South Africa, of which only 1 million are formally registered and 40% have access to finance, a large gap in the SME sector has been left open, and many small to medium enterprises are struggling to find suitable finance and capital tailored for their specific needs. The CEO of Merchant Capital joins us to discuss the SME financing space and to help us unpack the challenges that are experienced by such businesses. And he's here with us, Dov Girnun, to tell us a bit more about the business of funding. Dov, pleasure to have you with us.
Thank you, Tim.
Now, the 2.8 million number, has it been verified or it's just a thumbs up? I'm not sure if DTI have these numbers.
It's typically around 1 million are formally registered.
Yes.
So the 2.8 million has been spoken about, but we know of 1 million formally registered SMEs in the country.
Okay. And only 40% have access to capital?
Yeah, they have access to some sort of credit facility.
Yes. And then we talk about job creation in the country. How are we going to create jobs? I'm not accusing you. I just want you to help me understand this, that those are the companies or the organizations that are able to kickstart or at least help the economy grow and create employment, yet we are not providing them with financing. Why is that, do you think?
Absolutely. So yeah, I think you hit the nail on the head. Without those business owners having access to capital to help grow their business, they in turn then can't go and employ staff who can help with the job creation issue that we're having in South Africa. So typically SMEs or business owners in South Africa struggle to get access to finance for a number of different reasons. And especially now in the economy that we're in, where interest rates are rising and consumer spending is being tightened and the typical banks are actually tightening their credit policies. Now more than ever, it's more difficult for these business owners to get access to working capital to grow their business.
And that's the space that you operate in now, right?
Yes.
Tell me about your model and how it works.
So we have found a really interesting gap in the market whereby, as I mentioned, these small business owners have accessing this kind of capital is quite difficult. So we've created a process which is really simple, quick and easy for these business owners to access working capital. We look at businesses that are very early on in their business life cycle, so typically 12 months of trading, 12 months of operation, and we don't need such things as management plans and financials and those kind of admin documentations that the typical banks would ask for.
What do you ask for?
So we would look at their previous turnover through their point of sale machine. We will look at their couple of months bank statements to see their affordability. And then we get simple secretarial stuff like copies of IDs, landlord references and CRPC documents. So an organized business owner can complete our application within a matter of 30 minutes.
And the amounts that you are willing to extend as loans to your members or clients?
So typically we start at around 30 to 40,000 rand.
Yeah.
And then depending on the size of the business, we'll go up to 2 to 3 million rand.
Okay. And let's take a case study, for instance, right? That the company has been operating for 12 months. I suppose that's the qualification.
That's it. So
you won't qualify if you've
exactly.
been in operation for less than 12 months, right?
We don't do startup businesses.
Yeah.
The business needs to have a minimum of 6 to 12 months trading history. Yeah.
Okay, all right. Let's say the business has been in existence for that long, 6 to 12 months, then what? You look at...
So we would look at their previous 12 months trading history through their point of sale.
Yes.
So let's say for easy math, the business owner for the last 12 months has done 100,000 Rand through their point of sale.
Yes.
We will actually use that to forecast their future turnover and provide them a facility based on what their previous turnover has looked like. So the product that we offer is very different to a traditional bank loan in the sense that we charge an upfront fee which is fixed and it never changes. And the interesting thing about our product is that unlike a traditional bank loan, there's no fixed repayment term. So we agree a fixed fee up front, and it can take the business owner 3 months or 3 years to repay us. That fixed amount that we agree up front never changes.
I see. So, but again, the qualification, 12 months or 6 to 12 months? I just want to make doubly sure. Which one is which?
It's typically 12 months trading.
Okay, so 6 to 7 months, not really.
In exceptional circumstances. So for example, if you are a restaurant franchisee and you have a number of restaurant franchisees and you've just opened up a new one that only has 6 or 7 months trading, we will look at that business because you have previous track record from your other restaurants. If you're just your first-time restaurant owner, then we would need a minimum of 12 months.
Now, how has the performance of your clients been in terms of liquidating their loans with you?
So we have a very robust credit underwriting system. So thankfully to date, our bad debts, or what we call our non-performing loans, have been extremely low. Having said that, what we've seen in the last sort of 6 to 12 months where the retail industry has been taking a bit of strain, we have seen a couple of our business owners' turnovers dip when comparing year-on-year figures. So, for example, July this year was a terrible year for retail businesses, and it's just something that we watch very closely when we're looking at providing these guys with capital for their business.
What is the turnaround time for a typical business that applies for a loan with you?
So that's something that we pride ourselves on, and typically a business owner who's applying through one of the incumbent banks can be, it can take a couple of weeks to get an answer, and unfortunately, very often the answer is no. Our product is, as I say, the turnaround times are much quicker than what you would experience from the banks. So if it's a simple deal, you're looking at a 3 to 4 day turnaround time.
Okay, so it's as quick as that.
Absolutely. And the reason we do that is because we want business owners to be able to have the ability and the flexibility to very quickly take advantage of certain situations. So whether it's an opportunity where one can buy some stock at a discount, but he's only got a couple of days to take advantage, or an emergency. So there's a flood in your shop, or something happens and you need quick access to finance. So with our quick turnaround times, you are able to facilitate and really leverage those opportunities.
Now, from your experience, and of course you've already seen the gap in the market, you have how many clients, by the way?
We've got a couple of thousand.
A couple of thousand. What exactly is holding small businesses back in South Africa? Because it's not a case of people not willing or not trying to get into business, and entrepreneurial types, always come back into the game, don't they?
Yeah, absolutely.
They fall, they pick themselves up, try again and fall. But what is it that's holding so many people with such great potential back, you think?
I think, and if you look at recent surveys, and these are surveys that have not been done by us at Merchant Capital, these are surveys that have been done by other people. The biggest hindrance to business growth for small business in South Africa today is access to capital. So, what you'll find is entrepreneurs will almost hit a ceiling in their business, and then they want to expand, but they don't have the options when accessing capital to help them grow. So if you look at all the recent surveys and focus groups, etc., it's having access to easy capital, as we call it, or easy credit to be able to grow their business. So I would say that is the number one hindrance currently today in South Africa.
Now, micro lenders, I suppose, have also been part of the problem. You don't operate like a micro lender.
No, we don't. So we don't play in the consumer lending space at all. We're a purely business lender, so we only lend to businesses. So we don't.
But I can imagine, the interest rates that are charged anyway, would they be the same as those of micro lenders?
No.
It's impossible for anybody to pay the micro lenders back within reasonable time anyway.
Absolutely. So I think, going back to my point about our non-performing loans being very low, that's something that we take very seriously. So we will only provide capital to a business where we believe that they can actually afford the repayments, because our product is unsecured. So that means if the business liquidates tomorrow, we actually cannot have, we don't have any collateral to go after that loan. So we make it our business to make sure that this business owner can afford the repayments of our cash advance.
Now, typically, just advice for free, let's get it from you now. Many people who run their businesses, what should they be mindful of, the smaller businesses, right? Besides the problem of not having access to capital. When you operate a business, what are the key issues to pay attention to?
So I think, Tim, there are a couple. And I'm trying to think of some stuff that is relevant at the moment. So the one thing that comes to mind is if you're a business owner who imports, so you are exposed to the exchange rate. So, we've seen a roller coaster in the last sort of 12 months of what the exchange rate has done, especially against the dollar and the pound. So I think, as an example, you've now seen the rand strengthen in the last month or so, and it's by 20 to 30% against some of the global currencies. So one would, see that as an opportunity now. So if you have importing to do, use the exchange rate as of today to import, because at least then you've locked in a certain price, and then you're not exposed again to big swings in the exchange rate. I think the second second thing, which is something that we pick up in our business, is be extremely mindful of your costs. So, you have to be quite in the detail when it comes to numbers and the financials and your gross profits and salaries and rental payments, etc. And I think the business owners that have a real good handle on their costs and their margins and their unit economics are the ones that succeed. The guys that sort of just trade and just think that everything in the background is going to carry on going well are the ones that are vulnerable in industry or market that we are today. So I think be extremely cognizant of your costs. Make sure that you negotiate with suppliers, negotiate discounts. Everybody across the supply chain is finding it difficult at the moment. So there are opportunities to negotiate discounts with suppliers, a reduction in rent with your landlord, or anything that can really help with your cost base.
Now, obviously you help businesses that are in immediate distress most of the time, who want cash quickly. Do you have long-term relationships with some of your clients? Do you develop those and say, you're on a growth path, we'll hold your hand for the next 3, 4, 5 years or so? Is that part of the approach?
Yeah, in fact, that is our approach. So we are not a lender of last resort. So in fact, we, probably a very, very small percentage of our current portfolio are the guys who need the money tomorrow. Our real sweet spot, and 95% of our portfolio are the guys who are looking for growth capital. So they are not in financial distress, because the last thing we want to do is then, provide them with a product that then pushes them over the edge. So we actually reject those kind of businesses, and we rather lend to businesses that have flattened out on their growth trajectory and are just looking for a cash injection to help them grow. So just to your point you mentioned earlier, is the way our product works is that once 70% of the first cash advance is repaid, they automatically qualify for a re-advance on the same terms or conditions or better. Because now we understand the business owner, there's trust, we understand their behavior, their predictability to pay, etc. So currently in our portfolio, we've got a 70 to 80% renewal rate, which means that the first guy that takes out his cash advance, he's coming back for a second, third, fifth, and 10th time. So we look at building long-term relationships with our clients, and we've had clients that first started with us 3.5, 4 years ago who are still our clients and are just growing with us every single day.
Most important detail, how do people get in touch with you?
So they can go onto our website, which is merchantcapital.co.za, or they can phone us on our national line, which is 217-2880. We currently have offices in all the regions. So we're in Joburg, Cape Town, Durban, PE, Mossel Bay, and Bloemfontein. So we have reach and availability in all the regions in South Africa.
Everything of the best, and thanks again for assisting our small, medium-sized businesses and helping them grow. We appreciate it.
We're trying our best. Thank you, Tim.
All right, get in touch with Merchant Capital. You've heard from Dov. He's the CEO of the company, and it comes from him, you see. If the story changes, somebody somewhere, the other end of the line, call center, tells you a different story, insist and say, I heard the CEO on Tonight with Tim Modise. That is how things must work. Much appreciated.